Confession time. A few months ago, I used buy now, pay later service Klarna for the first time. I know Klarna and similar services come in for a lot of criticism. People are rightly worried that clicking that buy with Klarna button when you're online shopping makes it just a little bit too easy to take on debt. Debt in itself isn't a problem, but it can become a problem when that debt becomes unaffordable or otherwise out of control. In my case, buying something, my Peloton bike, using Klarna made sense. I could afford to buy it with cash, but the offer was 0% APR, with monthly payments comfortably within my budget, and the ability to earn a modest amount of interest on the cash that I would have otherwise spent. Before I talk about the future of these buy now, pay later firms following some big news about them today, please do take a second to smash the like button. It is a huge help as I continue to grow my YouTube channel, as liking these videos tells YouTube to show them to more viewers, and hopefully that means a whole new audience who gets to learn about becoming wealthier and happier. After all, that's why I make these videos for you, so go on, smash that like button now. These buy now, pay later services like Klarna are not currently regulated. That means there is little in the way of consumer protection for people who might fall into problem debt by using them, and a lot of people are using these services. More than 5 million people in the UK last year borrowed a total of £2.7 billion through services like Klarna. Unsurprisingly, buy now, pay later services have come onto the radar of the regulator, the Financial Conduct Authority. The FCA now wants to bring Klarna and others into what they call their regulatory perimeter, which means that they'll be able to regulate them in the future. The decision to attempt to regulate the buy now, pay later market follows a review. It was carried out by the former FCA interim chief executive Christopher Woolard. The Woolard review looks at how regulation can better support a healthy market for unsecured consumer credit, considering the impact of the pandemic, new and emerging business models, and the new developments in the unregulated buy now, pay later unsecured lending market. Christopher Woolard, chair of the review, said, "Most of us will use credit at some point in our lives, so it's vital that we have a fair market that works for everyone. New ways of borrowing and the impact of the pandemic are changing the market, with billions of pounds now in unregulated transactions and millions of consumers at greater risk of financial difficulty. Changes are urgently needed to bring buy now, pay later into regulation to protect consumers, to ensure that there is secure provision of debt advice to help all those who may need it, and to maintain a sustained regulatory response to the pandemic." Alongside these urgent issues, the review sets out a series of recommendations for how the FCA, working with partners, can build a better market in future. Within the review are the findings that UK households now have almost £250 billion of outstanding consumer credit debt, and more than 42.5 million households used consumer credit in 2019. There are 26 recommendations for the FCA set out in this review, all designed to make the unsecured credit market fit for the future. Don't worry, I'm not going to go through all 26 of them, but I will share some of the most important. The recommendations include the regulation of the currently unregulated buy now, pay later products market. These products are currently exempt from regulation in the UK, but the review recommends bringing them inside the UK's regulatory perimeter as a matter of urgency. Buy now, pay later products are becoming increasingly popular, with their use more than quadrupling during 2020. While the growth in this market gives consumers more choice when it comes to their credit options, this expansion also comes with a significant potential for consumer harm. Another recommendation in the Woolard review is for debt advice, which will be critical to a sustainable market in the long term, especially as the economy recovers from the impacts of COVID-19. The review explained that free debt advice services need to secure long-term funding as demand increases by as many as 1.5 million additional cases following the pandemic. That's an awful lot of people who are likely to need debt advice in the future. It was also recommended that funding relief will need to be in place to help the poorest pay fees when applying for debt relief orders. And when it comes to forbearance, the review found that the FCA responded quickly and effectively in the emergency phase of the pandemic, and it will need to continue its response throughout the recovery phase too. For example, the FCA may need to consider revising its rules and guidance to create more consistency in the type of support lenders offer to those who are borrowing and struggling to pay their debts. The review also concluded that a sustainable credit market needs more alternatives to high-cost credit. As a result, the FCA needs to work with the government and Bank of England to reform the regulation regulation of credit unions and community development finance institutions. More work is needed to encourage mainstream lenders to enter these markets. On regulation, the review recommends that regulation should be driven by the outcome being sought and how consumers are using these products in the real world. Regulation should deliver similar protections where consumers face similar harms, and the FCA should focus on lenders meeting consumers' needs for the entire term of the product. And apparently the FCA should also review the practice of repeat lending. In response, the FCA said that it welcomes the Woolard review and agrees there is a strong case and a pressing case for bringing buy now, pay later business into regulation. FCA Chairman Charles Randall has written now to the Economic Secretary to the Treasury to propose that the FCA and government work together to design the appropriate regulation. Ensuring consumer credit markets work well is one of the FCA's 5 priorities, and the recommendations of the Woolard review will now enter the FCA's business planning process. Charles Randall, chairman at the FCA, said, "Unaffordable credit can damage the lives of people who are already struggling to manage everyday expenses. While we have made progress in reducing unaffordable debt in the years before coronavirus, the pandemic has had an unequal impact on households. Many people have been able to reduce their debts, but some of the poorest in our society have exhausted any savings or run up more debts. All of the authorities which cover debt and debt advice must act together systematically to prevent problem debt and help people get out of a spiral of debt through properly funded debt advice. Regulation should be consistent, and the review shows how we can ensure high standards in consumer credit regardless of the form of credit. The review has powerful recommendations on debt advice and insolvency, including on the IVA market. We are ready to work with other regulators to reduce the harm IVAs can produce for people that use them, and to reduce the scope for unscrupulous operators to prey on vulnerable indebted people through for-profit debt packaging. As the market innovates and changes, regulators and legislators need to respond quickly and decisively to protect consumers by facilitating credit where it is beneficial and clamping down on it where it does harm. The FCA agrees that there is a strong and pressing case to bring buy now, pay later business into regulation. If you've already used Klarna or another buy now, pay later service, then this move to regulate the lending services probably won't affect you too much. But for new users of the services, expect a more robust approach in the future when it comes to assessing affordability, making sure that borrowing the money won't tip you over into problem debt. And should things go wrong, one significant benefit of regulation in the UK is access to the Financial Ombudsman Service, an independent arbitrator of complaints about regulated financial services businesses. If, for example, you had a complaint about Klarna in the future, once they're regulated, you will be able to escalate any unsatisfactory response to that complaint to the Ombudsman for them to decide what the outcome should be, and their decision is legally binding. Regulating buy now, pay later services is likely to make them less slick in terms of their use. Thinking back to my experience of buying that Peloton bike with Klarna, it was far too easy to click a couple of buttons and access that unsecured 0% APR debt. Do you think that this is the right move from the FCA to regulate Klarna and others in this emerging innovative debt sector? Let me know in the comments. I'd love to hear what you think on this one. Thank you for watching this video. Until next time, I'm Martin Bamford, and remember, when it comes to your money, the more you know, the faster it can grow.